afternoon. Welcome to Morning Trade with Money Control. I'm Sumaira Abdi and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends, and most importantly, your queries answered during the course of this show. So guys, keep commenting on our live feed and we'll have your queries addressed by our guests. But before we get them on board, let's see what the global handover looks like this morning. Well, it's been quite a topsy-turvy ride. But first, it was a broad-based rally on Wall Street that we saw after last week's brutal sell-off, which saw the Dow Jones surge nearly 2%. The S&P 500 rose nearly that much, and the Nasdaq Composite rose about 1.5%. Financials saw their best day since the 9th of March, with the sector adding over 3%. But this comeback rally could not be sustained in overnight trade, where the stock futures fell in the extended hours. The big cues to watch now are the new home sales data, which will come out, and also a speech by Fed Chair Jerome Powell, which is due to take place on Tuesday. Also, this somber trend that we saw in the futures overnight has spilled over into Asia as well. Markets are subdued as investors are now weighing in the possible US tariff cut on China goods. The SGX Nifty also signals a bit of a tepid start for the Indian market, just I think slightly in the green as of now. But let's talk about what's happening with new age tech companies. That's the big talking point. Nitin Sharma of Moneycontrol Pro is joining in. Hi Nitin, not just our own markets, right, but globally as well. It looks like these new age tech stocks, which were all the rage, and now nobody wants to touch them.
Yeah, morning, Sumaira. Nice to be here. Yes, exactly. During the COVID year, entire 2020 and to the most of the 2021, we saw the valuations as well as the price zoom for all of these internet and the platform stocks. But since then, I would say around from November onwards, these stocks are the most sold off. So if you look at pretty much any platform companies, they are down somewhere between 60 to 80%. Especially with the food tech companies, which are down close to 70% globally.
And, for our own markets as well, I mean, we had seen one stellar listing after the other. What is the pipeline looking like? I mean, today, of course, we have Delivery, which is going to list on the exchanges as well. But our own markets, again, we had Paytm, Zomato earnings coming out. Are investors not interested anymore in this space?
I think when the high growth businesses come to the market, to the public market, investors typically expect them to deliver profit, or at least to have some visibility by when they can deliver profits, and which drives the share price typically on long-term basis. So those loss-making businesses, they are rarely forgiven by the market, and hence this is what same has been happened. Similarly, there are valuations which already peaked in the end of 2021. So now investor interest is kind of tempering down and moving to other places, including the commodity stocks.
But what about, earnings as such? I mean, for Zomato, we have seen, actually, I mean, to my mind, it looks like metrics are improving, but loss has widened. How do you read those earnings?
Yes, exactly. So for the fourth quarter, EBITDA loss is pretty much up by close to 200%. However, down around 8% sequentially. Revenue, if you look at it, it's up 75% year on year and 9% sequentially. But it's a net loss that it has widened around 360 crores. And when you look at the KPIs, for example, the average order value, it was flat compared to last year. So it's around 398 rupees. Similarly, GMV is no doubt up by 125% year on year to 21,300 crores. But when you look at it, with the number of orders have increased, so then it makes sense that since the average order value is not going to increase significantly, so the next level of growth is going to come from the number of orders that they grow.
But, in this whole, say, the recent listings in this new age tech space, are there any investment ideas?
Yes, pretty much. So when you look at new tech businesses or platform companies, the stocks which are profitable, they are operationally profitable, as well as they have good growth trajectory, continues to be in favor in the market. One such example is Map My India. So its fourth quarter earning saw around 31% sequential revenue growth and an EBITDA margin of north of 40%. And it still trades above its issue price from the IPO. Similarly, I think Nykaa still trades above the issue price because there is a profitability, sort of an operational moat around the business and the acceptability. So these stocks looks better.
All right, Nitin, thanks very much for joining in. Also, guys, keep an eye out. The delivery listing is due to take place at 10 a.m. today. The retail response to this IPO was quite underwhelming, but institutional portion was oversubscribed. But the grey market is trading at a discount, and by all accounts, the D Street debut could be a tad bit disappointing. So that comes up at 10. But let's get a quick tech check on our market that's coming up ahead of the market opening today and the stocks which could be in focus. Nilesh Jain of Centrum Broking joins in. Hi Nilesh, morning. First on the market itself, because you know trade has become so treacherous now. You have an up day and you have a down day, and you know either way by 2 p.m. things could change to the other extreme. So what can we pencil in for today, given that the SGX is suggesting just a mild green at open?
Hi, very good morning, Sumaira. You have rightly mentioned we are witnessing extremely volatile weeks now, and the reason being, looking at the global market, we are getting mixed cues, and apart from that, a lot of volatility is also seen in the global markets. And if you look at the volatility index, which is also trading at a high level like 23, 25, so that is not a comfort zone for the bulls. And given the fact that we have entered in the monthly FNO expiry, so markets are likely to remain volatile. And if you look at the Nifty index, it is facing major resistance at 16,400, which is acting as a steady wall. And till the time if Nifty doesn't take out that level decisively, so we are likely to witness some sort of a consolidation in the range of 16,000 to 16,400. And the moment Nifty takes out 16,400, the upside will definitely open up for 16,600 to 16,800. A lot of base building is happening. And interestingly, yesterday we have witnessed some sort of a reversal on momentum indicators and oscillators. A buy crossover seems to be likely on MACD front. So given the fact that we are witnessing major resistance 16,400, it is important to remain cautious at a high level. And in the second half, mostly near about 2 p.m., like you have rightly mentioned, we are witnessing FII selling pressure, and a lot of unwinding is happening at 16,200, 16,000 call strike. So overall, we believe that markets are likely to remain volatile, and watch out for the levels 16,000 on a lower side and 16,400 on a high side.
Okay, and in fact, we've seen FII selling come through yesterday as well, taking it to a total net sale of 46,000 crores in May so far. But Nilesh, let's talk about some stocks. We were discussing these new age tech companies with Nitin earlier. For Zomato, do you have enough of data to sort of chart, perhaps a future target on it?
Well, Sumaya, it's very difficult to comment on this particular counter looking at the data, which is slightly limited. But all I can see is that we are witnessing lower top and lower bottom formation. And till the time it doesn't take out 70 levels on the higher side, we are likely to witness such kind of consolidation to continue. Well, on the lower side, the support is slightly coming at a lower level of 53. And it is better to stay away for the timing from this particular counter till the time we witness a sort of base building formation. And like I mentioned, 53 and 65, that could be the range for the short-term perspective.
In fact, we're getting a query coming in since we spoke about new age tech. There's somebody who wants to ask about Wipro. Kamal Raja R wants to know, is there any suggestion on Wipro? And the other stock is Happiest Minds.
As far as Wipro is concerned, looking at the overall turmoil that we have seen in the overall IT pack, I think Wipro may outperform going forward. But for that, it needs to take out 495 levels on a higher side. At current level, one can look at from slightly longer term perspective, and one can buy in a staggered manner. And there could be some more pain in the IT space. But my preferred bet would be SCL Tech, TCS, and Infosys from IT pack. And as far as Happiest Mind is concerned, it is again making a lower term and lower bottom formation and slightly dry volume we are witnessing off lately. And I think it is better to avoid for the time being taking any contra bet in this particular counter. But if somebody is already holding, then keep a stop loss below 819. And on the higher side, 970 is the immediate hurdle. Above that, the upside will again open up for 1050 to 1100.
Okay, we have another query from Rajesh Ved, and he wants to know what's your view on L&T Infotech, and that's also one of your buy calls for today.
That's coincidence, and yes, from IT Pack, L&T Infotech is one of the particular counter that we are liking. And looking at the overall data, yesterday we have seen a reversal on RSI from its oversold territory, and majority of in fact, I would say all the IT packs are trading in an oversold territory. So a strong pullback is very much due. So we believe L&T Infotech can be bought at current level. As a part of disclaimer, just want to mention that we have already recommended to our client yesterday, and the upside for L&T Infotech is open for 4400 to 4500. The stop loss should be placed below 4000.
Okay, by the way, one of the solid earnings that came out was SAIL, where it beat expectations, but the outlook could be a little bit cloudy because of the export duty. But nevertheless, in terms of revenue, I mean, on top line there was just a small miss, but otherwise operationally, in terms of margin, profit after tax, it was a very, very good showing. So we want to see what's the upside that is there for SAIL now. And this is also a question that SN Gokani is asking, which is, he's asked on the view on SAIL Q4, but Nilesh, I'll toss it to you for a tech check first.
Well, Sumera, overall, if you look at the Nifty Metal Index, SAIL being one of the underperformer, and last few months we have seen a lot of selling pressure coming in at a higher levels. Although at current level, after yesterday's fall of close to 11%, we have witnessed a big gap down opening. And it has gone into extremely oversold territory. A huge amount of volume was also seen yesterday. So I believe there could be some respite. We may see a strong pullback towards the levels of 78 to 80. But I won't advise buying at the current level. But somebody's holding, then one can continue to remain on the long side with a stop loss below 71. And for fresh entry, I would suggest better wait for some sort of a breakout to come in, which will come above 84. And post breakout above 84, the upside will again open up for 90 to 95. But for the time being, I would suggest better to avoid taking any contract in Steel Authority. Rather, one can look at more positive upside in Tata Steel and JSW Steel.
Okay, but since you wanted Mr. Gokani, the earnings fine print, so let me give it to you. Besides the numbers being okay, they have seen a sharp reduction in their employee costs, which is one of the big positive. Finance costs have come down 19% on a year-on-year basis. Other income has risen nearly 70%, and net debt too for FY22 has come down to 12,600 crores compared to 35,000 crores in FY21. So by all accounts, it is looking good, but because they have not used the higher cost coking coal, there could be a bit of a hit expected in Q1 of FY23. So I hope that sort of satisfies your query. But Nilesh, the other question that I have is on BEL, where they've, fundamentally the news is that overall earnings miss, but technically, how does it look positioned?
Well, BEL technically looks good, and given the correction that we have seen yesterday, I think it's a good buy at current level. Looking at the overall setup, it is indicating a high top and high bottom formation, and it is trading at near all-time high levels of 231, and the previous high is placed at 260. So I believe from current level, we can expect upside of 260 on immediate basis. It can be bought at current level with a stop loss below 220 for the upside levels of 250 to 260.
Okay. In fact, Arnav Sarma had wanted to know on BEL. So Arnav, I hope you got your answer. He also has a question on Marico and ONGC. Marico, we've seen make an announcement of an acquisition, but both stocks, Marico and ONGC, Nilesh, how are they looking?
So out of both, I'm liking Marico, specifically the reason being the overall Nifty FMCG pack has started reversing from the lower levels, and HUL is leading from the front. Marico is also trading above its breakout level of 520. So one can definitely remain long for the upside levels of 570 to 590, but one needs to have a time horizon of next 3 to 6 months. And for fresh buying, I would suggest wait for some dip towards 520. The stop loss should be placed below 490. And on the other hand, if you look at the ONGC, where the structure is not looking that positive, it is gone into extremely sideways consolidation. The stop loss should be placed below 150 if somebody wants to buy from a trading perspective. On the higher side, breakout above 165 will definitely open up the upside for 180 to 190.
Okay. And Naveen Kumar actually sent us a query. He wants to know the outlook on metal stocks. Yesterday, of course, there was a big hammering. Do you expect that, this downside will continue, or are any of them now entering a zone where, retail investors could look at buying in?
Well, before looking at any specific metal counter, I would talk about Nifty Metal Index first.
Sure.
If we look at the overall metal index in last 1.5 year, it has gone into a bull run, and from the high levels in last few months, we are witnessing some sort of a profit booking. And at current level, it has again come back to the levels of its major support zone. This is multi-month support of 5200. So if it breaks below 5200, then it will be considered as a structural breakdown. Post that, we may see the levels of 4900 to 4500 as well. So a cautious is definitely advised, but at current level, there could be possibility of some sort of a pullback, and pullback may open upside for 5400 to 5500. It also breach is 200-day exponential moving average of 5700. So I would suggest till the time it doesn't take out 5700 on the higher side, one should better avoid taking any contraband in the Nifty Metal Index.
Okay, fair enough. Veer S wants to know if Equitas Small Finance Bank is a good buy at these levels.
Equitas, just a moment.
Sure.
Right. So Equitas Small Finance Bank, yesterday it has given a big breakdown, and it has also breached its 200 exponential moving average, and it is breakdown with a lot of volume. In last two trading sessions, we have witnessed a volume of near about 70 lakh, which is quite higher in last 6 to 8 months that we have witnessed. So looking at the overall setup, I believe better avoid taking any sort of long side position for the time being till the time it settle down, and it needs to reclaim the levels of 55 on the higher side for any sort of fresh trigger on the higher side. The support is now placed at 45. If somebody is already holding the long position, then keep a stop loss below 45. But I believe going forward, that level will be taken off on the lower side. So caution is definitely advised, and it is better to avoid taking any long position.
Okay, Tata Motors is the other stock that one of our viewers wants to talk about. Christopher Cutina has written in asking what is the view now, what is the upside perhaps from here?
See, overall Nifty Auto Pack looks very attractive, and we have been recommending buys in auto stock in last few days. And looking at the overall Nifty Auto Index, I believe there could be possibility of upside 5 to 7% in overall auto pack. So out of these, what we are liking is Mahindra and Mahindra, Motherson Sumi, that already is in my buy recommendation. But Tata Motors, as far as this particular counter is concerned, it formed a double bottom formation at 380 levels. Although a breakout is awaited, which is placed at 428 levels. So I believe long position can be held, and fresh long can be initiated at current level with a stop loss below 400. The upside is open up for 440 to 460. And if it takes out 460 level, then definitely it's a good buy for the upside levels of 500 plus as a positional bet. So yes, we are liking Nifty Auto Index and all the auto counters.
Okay, and fundamentally the news is that the government has announced the export duty at steel export duty at 15%, which will be a positive for auto and OEMs because it will bring down the steel price. And of course, we have also seen the petrol and diesel excise cut, which is another positive for people to drive more, I guess. Okay, one final question, Nilesh, coming in for you this morning, and this is from Ankit Chavan. He wants to know, for the long term, what is the call on Tata Power? Technically speaking, what is the upside here? What is the target that you'd have?
See, for Tata Power, we have seen sideways consolidation of almost more than 6 months now. But interesting and positive part is that the momentum indicators and oscillators have gone into extremely oversold territory and indicating a possibility of a reversal. And one more positive factor here is that it is trading above its long-term 200 exponential moving average, which is placed at 210. and the price is currently near about those levels. So I believe definitely one can remain on the long side for fresh entry, wait for some dip towards 220, which seems likely. But overall, from a longer term perspective, I believe it is likely to test the levels of 280 to 300 in next 6 to 8 months. And given the fact that we have seen already a lot of positive news for Tata Motors in last few months, so this is a good opportunity to initiate long position from a longer term perspective, buy in a staggered manner. And if somebody wants to buy from trading perspective, keep a stop loss below 210.
Okay. And amongst your stocks for the day, the hot stocks, L&T Infotech, you've already spoken about. The other one you mentioned is Motherson Sumi, which you like. What's the rationale here and what is your target?
So as I mentioned, I'm slightly bullish on Nifty Auto Index as a whole.
Yes.
And our preferred bet is definitely Maruti and Mahindra. But there we have already witnessed a huge amount of run-up. But the opportunity comes here in Motherson Sumi. We haven't seen that kind of participation in Motherson Sumi so far. And it is forming a base near 110 to 120 levels. So it's a good opportunity from a risk and reward perspective. Upside is definitely open up for 150 levels as a positional bet. From a trading perspective, 135 to 140 could be easily achieved in next 1 month. It could be a bet for June series. And the from trading perspective, somebody is buying, then keep a stop loss below 118 and for the target of 135 to 140. And on the other hand, the L&T Infotech that we have already mentioned, that looks positive for a strong pullback towards 4400 to 4500. Stop loss should be placed below 4000.
All right, Nilesh, thanks very much for joining in. With that, we're going to wind up on this edition of Morning Trade. Guys, thanks very much for all your queries. Do stay tuned in now for Markets with Santo and CJ, which is coming up next. For now, we leave you with highlights of day one of Money Control in Davos. Have a good trading day.